Shivani, how do you look at some of the banking numbers which have come in, private sector bank numbers, and especially Kotak? Means I know you won't be able to speak on Kotak there, but private sector as a whole.
Yeah, so I think one point which is clearly standing out from the earnings that we have seen for this quarter is that the banking sector has seen fairly good numbers in terms of delivery, both across balance sheet as well as earnings. What we have seen is one, credit growth has started to pick up, and there has been a broad-based pickup across industry as well as retail credit, which is feeding into banks in terms of their balance sheet expansion. There is some signs of pickup as far as deposits are concerned, but that is one factor that we will keep a watch out on because LDRs have clearly moved up considerably, though most banks in terms of liquidity coverage ratio are still fairly comfortable. The second important takeaway from a result perspective was that the fear of asset quality deterioration clearly has not played out, which means that credit costs are well under control. And across segments, we've seen that banks have reported good numbers as far as credit costs are concerned, which is also helping in terms of earnings. Now, if rates remain largely stable, we do expect that the impact on margins that you had seen last year should start to stabilize, and the banks should see net interest margins also stabilize across the board. And therefore, there would likely be a pickup in terms of earnings for FY27. Now, this is one segment within the market where valuations on a price to book on a 1 year forward basis is trading much below its long-term average, and therefore valuations are clearly on your side. And therefore, from a sectoral perspective, banks, both private and PSU, is one segment of the market where we are positive on.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.